Hey, everybody, let's start the show.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday, New Year's Eve edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, Mitch Hodge with you for the final show of the year. And what a year it has been. It is extremely quiet out there in the markets. There is basically no news. So we'll spend the first couple minutes just talking about whatever Dennis and Joel saw yesterday that they thought was interesting, or whatever happened overnight that caught their eye. And then we'll go into our year in review. And so we've compiled 20 clips. We've gone through hours and hours of shows and compile what we think is a pretty good representation of the best of the year. We'll play those clips, and then we're going to talk about them, and we'll do that little back and forth. And we'll do that until the end, and we'll take some questions from our chat, and that'll be this show. We're going to look back. We're going to spend some time looking back because we've never done that before, and it's a nice thing to do. But before we do that, I want to throw it to Joel to give us an update on just how quiet things are in the market. Joel, tell us exactly what's going on out there.
Good morning, Spencer. Good morning, listeners across the world. When's the last time we come in and the SPOs have been basically unchanged? Down $1.25, 37.23. Pre-market low, that's right under yesterday's low at 16 even, and then pre-market high, not much up there, just above the all-time high close. We have crude in the red by 47 cents at 47.93. We have gold knocking on the door of 1900. That's up 390 at 1897.30. Silver, that's going to the same way. It's up almost 2 cents at 26.59. Bitcoin, the futures got to 29,700, but now we're in the red by $245 at 28,910. Triple D, what do you think of this new setup here?
This looks pretty sweet, actually. I kind of like this. So this is not Zoom. Look at this. Look at the stuff this can do. Oh, man, this kind of makes me want to short Zoom. This is pretty good.
That's what I said yesterday.
I'm looking at this. I'm like, this setup's pretty sweet. Let's see. If we get through with no hiccups, we'll come back to that short Zoom thesis. But Zoom is actually, just to start on a technical, this 350 level in Zoom, this was the level we got back into September, and we are trying to hold right there. So I'd say that 350 level is not looking too bad there. But, we're not going to start with the technicals. We're going to start with the overall market here. So quiet markets, Joel, but we've been relentless this year. This 2020 year started bliss, went to piss, and right back and finishing blissfully here, right near new all-time highs. How are you, Joel Elconin, going into 2021?
Neutral.
Neutral?
Yeah.
You sold all your stocks?
No.
Neutral is flat.
Neutral just as my bias in the markets. We'll just have to see. Sticking with the long term. Might do a little looking today, a little trimming before the close or whatever to see. But no, just the market's had one hell of a year. The big sigh of relief after being down at 2,200 up to 3,700. So actually 3,700 and beyond. So right now the trend is your friend. That trend's been up.
So, Mr. Spencer Israel, I'm going to ask you the same question.
Yeah.
How are you approaching 2021?
I am going with the trend until anyone says otherwise. So
you know what? That's a winning recipe. Go with the trend. That works. That's how JC does it, and he's pretty consistent over there. So going with the flow. And the last Mitch is hiding in the background, so I don't know if Mitch wants to come on and say how he's approaching 2021, but I've asked everyone. So, Mitch, are you hiding there?
I don't even know if his camera's on.
Match.
Surely,
When I see the Christmas tree in the background, it gets me so relaxed. I'm so hyper in the morning. And I see Mitch and it's like, calm. It's a little bit like Anne-Marie Band, just calming feeling there. And he's got the mountains.
The mountains are climbing, and I must go. They're calling. They're calling.
What are you doing? What are you doing in 2021?
I am actually going to be opening a new portfolio, guys. I've been really working hard on the story approach. So I'm going to be working hard in 2021 to approach more of these stories and really try to work a portfolio to diversify in these plays. Like I always say, we don't make one trade make us or break us.
I stick with that too. Stay diversified in your trading portfolio, and you'll stay in the game a hell of a lot longer. May not get rich fast, but you won't get broke fast either. So... okay, so let's get going. We're 5 minutes in.
Wait, real fast. Before we go, just got a quick question, and I want to confirm it with you guys. You can, in the U.S., you can still do tax loss harvesting today. Yes, okay. Because in the U.S., we go by the trade date, not the settle date. So if anyone has any losses that they're looking to take advantage of,
which they shouldn't have.
Well, you never know.
It was a struggle to find them.
If you have any losses, or if you have any gains you want to offset by any losses, you can still sell today.
Let's see about Fubo like 3 days ago.
Right. Yeah. So just everyone know you can still do tax loss harvesting today.
Canada was the 29th, so it's over for Canada. Anything you're selling today is hitting 2021's earnings. So Canada goes by the settle date. U.S. goes by the trade date. They changed that. It used to be settle date everywhere. They changed that in the U.S. a number of years ago. So yeah. So you're good to go if you're an American citizen. If you're Canadian, you should have been listening 2 days ago.
Okay, let's go to these clips. Like I said, I've compiled 20. So this first one, and we're going to go in chronological order. So obviously there's a lot of clips from the beginning of the year. This first one is from January 27th. Is actually the very first time that coronavirus or the pandemic or anything about that was mentioned on our show. And I'll play that clip. And so you'll see us on the side. I'll play the clip and I'll have the date. Nothing bad. But here we go. This clip is from January 27th.
I mean, let's put it in perspective. We are still, if you look at the S&Ps, we lost 1.5% here this morning, coupled with Friday's loss. So you're sitting around 2.5 to 3% off the highs. Nothing to get that nervous about. But then you start reading about this thing. And I wasn't that nervous on Friday. If we were talking, I was like, they probably buy it back. I kind of shrug it off. But as you're reading more on the weekend here, you're like, this isn't good. I mean, this virus is not good. I mean, there's been people that have been saying, it's not as bad as SARS or not as bad as Ebola. But then I'm reading other things that's saying it's worse because it's more contagious. Yes, the death rate is slightly lower, but at the current rates, the reproductive rates on this thing, that this thing could be global in a couple of months. So it sounds scary.
That was prophetic.
I was scared. I was scared. Actually, yeah, it went global. So this is when I started getting nervous about my long-term portfolio. I've never been nervous about a virus before. I didn't sell everything with SARS, but I was starting in late January. I was just on Twitter too much looking at what was happening in China, and I'm like, holy man, this is looking like, I'm watching them with the drive down the road with the bleach trucks and spraying bleach into the air.
Oh, remember that?
People into their homes, and I'm like, this is not normal. I'm like, and how are they containing this? Because I still see flights coming in, how are they really containing this? So I started getting nervous. And this is when me and you, Joel, we were talking, we're like, maybe we should buy some puts on the long-term portfolio. And I never buy puts. And I'm like, maybe I'm just going to buy some puts just in case. So I bought a whole bunch of SPY puts.
Well, actually, it's funny you mentioned. It's funny you mentioned that.
Clip coming into that.
That's the next clip.
Okay, I'm not going to ruin it.
So this is 3 days later.
This is when I'm full on nervous.
January 30th. Dennis officially gets scared and turns bearish. Here we go.
The World Health Organization is saying it's not a full-fledged emergency here yet, but it's still very, very scary, and the situation is very scary. And I've been nervous for a few days. If you've been listening to the show, I lightened up my portfolio in the last 2 days. I sold a number of stocks out of my long-term portfolio, and I also bought puts on the SPY. I also bought puts on some airlines. So just playing the bounce. I mean, fading that bounce, classic fade of the bounce. I sold my iRobot yesterday in the 54 handle. I sold Etsy. I sold my Twitter. I sold my Kohl's. I sold a number of stocks out of the long-term portfolio. I have the most cash I've had probably in a decade in my portfolio here right now. Scared. I was very scared. Obviously, I should have held that Etsy. I didn't know about the lockdown. I didn't know about the lockdown trade versus the reopening trade back on January 30th. I was just selling everything. I'm like, I'm selling stocks. And I was like trying to sell stocks that I didn't have huge capital gains in because I didn't want to lock in. Like, I've owned Google for a decade, so I'm not going to go sell my Google that I'm up 500% or MasterCard I'm up 1,600%. I was looking at recent purchases, like stuff that I wasn't up a lot in, just trying to liquidate that stuff first. And then I'm like, okay, now on the rest of the stuff, I'm going to buy some SPY puts. And me and you were talking, Joel, we're going to buy some airline puts. I'm like, and we had figured we had this whole thing figured out. January 30th, we're like, we got this figured out. This is going to get ugly. This is going to get sloppy. This is going to get messy. And what happened to us?
Yeah, the market rallied.
We were too early. And all of those puts that I bought, the SPY puts, the airline puts, and and there was a bunch of other ones too.
Yeah.
All of those puts expired worthless. The whole first round of puts expired worthless.
So funnily enough, Joel didn't even need a pandemic to be bearish. Joel was already bearish.
Had a little bear in him.
Here's what Joel had to say about that. This was also from January 30th, right after Dennis said he sold a bunch of stocks.
Take out the coronavirus as a catalyst, right? I mean, I like to look at that from that perspective. I mean, even before that happening, you look at the gains from 2019, tacked them on in 2020. Very extraordinary market coming into an election year. Also, I mean, usually the market performs pretty well in an election here, but I think you got a lot of circumstances going on here, besides this coronavirus, and the expectations for the market just to keep going up and up and up and up and up is just not a realistic expectation. It's good for the market to back and fill. It's good for the market to come in a little bit, consolidate and grab some momentum. Unfortunately, it's, instigating this. That's a horrible thing. So you can look at it from a lot of different angles here.
Well, I guess there's things that are right about that and things that are wrong about that because we just didn't.
Exactly.
Kept on going back up.
We were short term, probably right. Long term, well, actually, short term, we were wrong because, like I said, all those puts expired worthless. So I don't know where the next clip is going, but I was like, coming to like the second week of February, I was like, can I be this wrong? I'm like, I'm seeing this virus, and I'm like, this is spreading like crazy. Can it really? And Chris Camilo was on our show, and I had talked with Chris even back then, and he had gotten really bearish. And and I was saying, like, can we be this wrong? Like, is this really, is the whole world? Chris said on our show, is the whole world wrong? And we're right. I don't know, but I'm like, I'm not, I'm still not confident enough to get back in the market. So I'm like, I'm sold more stocks in February, and then I reloaded all of my puts, all the puts that expired worthless. My whole first round expired worthless. I reloaded my SPY puts. I reloaded the airlines. I reloaded whatever I could. And then what did I do? I went on vacation.
I know.
Right,
I just want to hop in here for 1 second.
Yeah.
This whole time, Lisa's coming home from the office, and she's saying, I'm calling the health department. I don't have gear. No one knows how to deal with this.
She's nervous too.
I'm scared. We're not going to close the office. We have to, we have to serve our patients and everything. And she got responses from congressmen. I don't know if she went to Senate, but this is like, so she's saying she's coming home every day and says, no one knows what the hell to do. And I'm like, oh my God. And then there's some later clips. I remember having a discussion with Brent a little bit later on, but where's the next? I don't want to spend too much time on one clip, but
we're jumping ahead. So this is now the first week of February. This is February 3rd, and Dennis is getting
not knowing what the hell's going on.
Dennis is getting even more bearish, Here we go.
Nice rally here this morning. Obviously, we had the ugly day on Friday where the market finally started to get some sense into it. I've been challenging the market all week and not understanding why it won't go down with the potential contagion here. And I don't know if it's a contagion, but what do they call it? Pandemic, potentially? But the potential pandemic, we'll call it. I have not understood at all why the market continues to be so resilient. It's resilient again here this morning. I still think, like I was saying before, I'm not buying dips. I'm selling rips. I sold more Friday morning before we started dipping. I actually sold S&P SPY out of my long-term portfolio, which I've never done before. And I also sold something else too. Oh, I sold Manulife, which is Canadian. I was like, nah, I'm not owning that one either. So just lightening up the portfolio. I'm actually at a portion now where my portfolio is probably as much cash as I've had since the financial crisis. So but we'll see. I'm making a call that I think we're only early innings.
And then market kept on going up, and Dennis got more and more confused.
I was like, I jumped ahead, but I couldn't believe it. I mean, that's when I reached out to Chris Camillo because I knew on Dumb Money he was talking the same thing as I was like, and he's like, couldn't figure it out either. Yep. Why do we keep going up when the whole, China, this is a pretty obvious thing. I mean, at this time, it's like they're not going to contain this virus. This is spreading. So
we got a couple epic rants coming up here. This is 2 days later.
Mad because I'm actually getting mad that the market's going up. I'm at this point in time, I'm very flustered. I've sold stocks. I'm way wrong so far because the markets went up like 3% in my face. I own puts. Sold stocks. I'm like, what the hell is going on?
What date is the next clip?
Way early.
What date is the next clip?
This is February 5th. That's 2 days later.
Okay. Yeah, give us the clips bang, 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 because we got to get to like March.
All right.
This is my analogy, and I think this is how the markets are going to trade going forward. We've got a lot of bad news last night. A cruise ship gets quarantined in Japan, 10 people aboard. Deaths toll obviously increasing. The numbers, not great. S&P futures trade down. Overnight, what happens? Rumors of a vaccine. Vaccine rumors trump all. And here is the issue that I have for my short thesis, is that Russia, and everybody has been saying, we're 6 months to 12 months away from a vaccine. But if we're going to rally 30 handles every single time we get rumors of a vaccine, we're going to probably get rumors of a vaccine in the next 6 months. We're probably going to get them 3 times a week. So if we're going to rally 30 handles every single time we get a vaccine, how can you be short? Because that's going to trump all. The rumors of the vaccine are going to trump all.
You were wrong. It was 60 handles every time we got a rumor of a vaccine, not 30 handles.
Frustrated with that too. I wasn't trying to cheer the end of the world because nobody wants the end of the world, but I wanted the markets to like price in my thesis. And I was like, I didn't get it. I did not understand it. For a whole month it really went on where the markets completely ignored all the tea leaves. And the market ended up being wrong.
So this is the last pre-crash
before the SIHI blank hits the fan.
Thank you, Dennis.
February 18th.
I didn't swear for you, Joel.
February 18th.
When you're talking 800 million people under quarantine and the market's making new all-time highs, it's the most irrational market I've ever seen in my life. It is not trading on logic. It is not trading on fear. The only fear it trades on is the fear of missing out. But, I've been trying to play the short side on this market a few times, and I've been burned. So off with the coronavirus. And I'm like, okay, well, I'll buy my puts on my long-term portfolio. I'm going to play it long. The play almost is like, the insurance is so bloody cheap. When it's down there looking out, I was almost wondering if the play isn't just to buy a whole pile of SPY and hedge it all with puts going out 5 months. And, if this turns into nothing, the SPY is probably going to rip a lot more than 3%. If it turns into something, well, you lose 3%. So, and if you really turn it into something, then the play is just to buy it flat out put. So, but the options I just think are not pricing in any of this. That was it, and that's where I was like, I'm just buying puts. So maybe I didn't buy that whole. I had bought some puts originally, but that's when I reloaded. That's when I was like, I am buying puts on everything because they were cheap. I picked up the 325 SPY, and I went out to June. I was like, screw it. I'm not going out 3 weeks this time.
That was a good move.
I'm going out 4 months.
I know.
Because I'm like not trying to time when the shit's going to hit the fan, but I'm like, it's going to hit it by June. And I went out, and the SPY was trading around 335, and I bought the 325s, and I think I paid $4 for $4 or $5, Joel, going out to 335 or 325. So obviously, I'm making money at like 320 SPY, and we know what happened in the next month.
Yeah, the February expiration, that was the following week, or the end of that week, and that's
when it started.
Well, the expiration, no, because
I know they burned us on everyone on the expiration. It started the week after that.
Yeah, one more month. Like if it, and I always on the timing of this, and like the greatest, lesson that I've learned from 2020. We started talking about it in, January. So I'm thinking, I was thinking the same thing, like February, but it really to hit the home run was the March expiration, but hindsight's 2020. What's the next one for us?
This one's a big day. This is March 2nd. This is a big day for a couple reasons. One, it was Joel's last day in the office, maybe forever. And two, it was the day that Dennis came back from vacation. Dennis went away to Jamaica, right? And Dennis came back. He missed the first week of craziness.
Yeah.
He missed everything. And this is the response. This is what we were greeted with when Dennis came back from vacation on March 2nd.
Welcome back, Triple D.
What's going on?
Not much. How you doing, man?
I'm doing good.
Yeah? How was the vacation?
It was interesting. Anyway, so I gotta take my mask off here. I'm okay now.
You sound better. Okay, good.
Yeah. So
I was just kidding with you guys. Just kidding. I haven't wore the mask. I have not wore the mask, but I do have them. 3M, like 3M, I do have them, but no, I haven't wore it. So I don't think we're at that. I don't think we're there yet that I need to wear the mask on the radio show. So I'll take it off for the radio show. It was good. So you know what, though? That has got to be the most expensive vacation I've ever taken in my life.
Oh my God.
I missed the best week of trading in a decade. What's up? Wow. I thought it could get ugly, and I actually was prepared, obviously. We had talked about this for a while. So I had my SPY puts, and okay, so back up. We've had this vacation book. We went to Jamaica. Me, my wife, kids, friends of the family, their kids, had this vacation booked for the last 3 months. Everybody is pumped for it. I thought about canceling this vacation nonstop for the last week and a half, like just bailing on it. But I was like, everybody wants to go. I don't want to be the person. When I left last Friday, the markets were literally 2% off the all-time highs. So I'm like, you know what? I'm scared, but I think we're ahead of it. I think this could be an ugly week for the markets, but I'm not going to cancel my vacation because of, a potential opportunity cost. Anyways, it turns out I obviously should have maybe canceled the vacation because the market rolls over 3,000 points when I'm away. So a lot of opportunity cost on that vacation there. But regardless, I had a good time. The kids had a great time. We enjoyed ourselves. The resort was fairly empty, to be honest with you. It was about, they said it holds 1,500 and we were at 900 people. So it wasn't too full. It was a beautiful resort. Kids swam every day. I was in the lazy river relaxing while the markets were falling thousands of points. So it was very, very, very interesting to take a week off, but I was checking constantly. I couldn't stop myself.
Yeah.
I want to make two comments on that. The Friday before, I don't know what the date was. I was in the office and I don't know, Brent, I don't know. He said, I want to talk to you. Or I'm like, I looked at him. I'm like, Brett, what's wrong? And he's like, man, this news flow. He goes, he goes, I've never seen it like this. And I think that's when things were starting to explode in Europe. And I'm like, well, and he just was concerned, and it was the news flow. And then I came home, and then that Monday, Lisa's like, you can't go down to the office anymore. I'm like, what do you mean? She's like,
early lockdown.
Well, she goes, I may be, people are coming in my office. I don't know what the exposure is. I don't have the right equipment. If I get sick and you get sick and you go downtown, then you're going to get the whole office sick. And I was like, okay, I mean, it made sense in March. And then that was the last. I can't believe it's coming up on a year, but I just remember that sequence of events. Yeah. And then I think it was that Friday or the following Friday. When did Clump declare the state of emergency?
I don't. Sometime it was, if not that week, the week after.
Okay, because I remember I texted Dennis and I said, oh man, like when that hit, I was like, oh my God. I said that I go, we're gonna crash, and he's like, and this was your text. You said, don't worry about your portfolio, worry about your family. Is what he said. And I picked up the phone, and we were supposed to move Emily home the next week. I picked up the phone. I told Lisa, I pulled out her office. I said, we're driving to Virginia and we're picking up Emily and we're moving her home overnight. And she goes, why? And I'm like, I called the police station. I'm like, are you guys closing the roads? And they're like, no. And then the following week, I believe it was Friday the 13th that we ended up doing that. But yeah, hopefully never experience something like that again. But a little long on that rant. Go ahead with the next one.
We were all scared, but thankfully we had Anne-Marie Band on that very day.
She calmed us.
We had Anne-Marie Band, and she has a very calming effect on us. Very, very measured way of looking at things. And this is how she was approaching things on March 2nd. This is Anne-Marie Band.
Now, what we want to do is automatically go, oh my gosh, this is my shot. I've got to participate. The moves are so big. But step back a minute and say, wait a second. What is the risk of engaging and engaging incorrectly when you've got massive moves and you do not have the feel that Dennis is talking about? You're going to lose a lot of money. So you have two choices. You can step back and watch. For me, I trade to eat. So the market is a buffet every day. And I cannot eat an elephant in one sitting. I'm going to have one plate. And so you can go in and every day take a small chunk out of the market. And if you have that approach, you will develop consistent motion. If you go in and say, here, I'm ready to bag my elephant, and you don't have the skill, the mental fortitude, or the capital to manage the kinds of rocket moves that could come, you are going to blow your account out. And there's nothing wrong with watching.
So calming. I even feel calmer now again. It's therapeutic almost. Her voice is just amazing. But anyways, it's a good, I mean, that's the one thing. Like when you're getting into markets that you don't understand, it's not a bad thing to sit on the sidelines and get some education and learn. I mean, I get down and dirty in this. I've been through a couple of, I love market crashes as a trader because there is just so many inefficiencies, and I'm an inefficiency trader. And it's not a coincidence. I took the first week of March. I missed, the first 3 or 4 days of March. And that was still my best month in a decade. And since 2008, that was my best month since 2008. Because there's just so many inefficiencies. I mean, people are just going crazy. And and what I mean by inefficiencies is, looking at just basically pairs trading. This stock's here, this stock's here. I'll short this one, because these are related. And, and they eventually do come back in, and sometimes they quickly come back in. But markets, when you're going straight down, you're a long only trader. Like, you don't short stocks. When the markets are going down, you're going to get hurt if you're engaging. It's hard to just, okay, it's going straight down, but I'm going to buy this little dip and make money, buy this little dip and make money. It's a 90% chance you're probably going to lose money when the markets are going straight down, you're long only. So, I mean, that's the one thing, like I said, that's why, I say to traders who are starting to get in, farther into their trading career, you eventually do need to add the short side because markets go two ways. It's not always going to be like this market that's been straight up since March.
I just want to add one thing on that, and that was when we were getting a lot of the limit situations, and I think one thing, the markets were just, I thought not like technically like the returns that everyone got, by buying, but just, between the SPY and the SPOOs and just, the way things were trading, it held together. And, Dennis said, we go through our SPY and SPOO battles and everything. And when the SPOOs were locked limit, we were looking at the SPY. So I don't know, how many people were listening to the show back then. But I mean, that was just, just being through it, been through it before, looking at it, looking at all the different factors. And then, like you said, Anne-Marie comes on and, and talks calming. I remember that too. I remember that. That was a good one. All right, Spencer, how are we doing on are we time? Are we spending
we're doing great. No, we're doing great. I don't want to appear that we got everything right because we didn't. This is one thing. No. This is one thing that we did not get right. This is from March 23rd.
Bottom line is we aren't going to have any sustainable rally. We're not going to rip up to 280 or 300 on the SPY until we get a cure or a vaccine. That's going to be the difference. And if we can get that, I will start buying stocks in my long-term portfolio. Until they show me something that really, really works, I'm going to stay with 80% cash in my long-term portfolio because the economy is suffering significantly because of this, but it has to. It's short-term pain for the long-term gain of saving lives.
Now, that's notable because what day? That was March.
That was the day.
That was the day. They should have went all in that day.
That was the bottom. And in hindsight, we can say, oh, it's because that was the day that the Fed came in. But we didn't know it at the time.
Yeah.
Oh, they came in a couple times. Yeah.
No, but that was, Joel, that was the first day. That was March 20. That was the day. That was the very first time the Fed came in with a new stimulus program.
Well, the Fed was buying SPOOs the whole time. So, I mean, who else was in there buying them when we were going down like that? But there was one other day where, and I remember I caught a short off it when they took the what did they take? They took the Fed funds rate to 0. That was a little bit earlier. I remember that happening. But that was the. I remember. Yep, that was And if it's interesting too, because if you look back, some stocks, bottom a few days ahead of that, few stocks, a few days after. But if you ever come into that situation again, and who knows, man, I go back and I look at the monthlies, and it is incredible where some of these stocks ended up finding a bottom. And it wasn't on no daily chart. It wasn't on no
It looked like it was like stocks were going to go to 0. I mean, Wendy's was one, WEN. It went from $24 to $6. I mean, in 3 weeks. The moves were just absolutely incredible. We had no precedence. Ackman was on CNBC. Remember the Ackman rant and saying, and he went, and obviously, he ended up, turning around and covering a lot of his shorts and going long right around that time, which was a genius move. But what's the precedence for shutting companies down and companies going to 0 revenue? I mean, how long do they survive? So it looked like there was going to be a lot of companies that were actually going to go out of business. But what changed everything was the lockdown. It actually worked, and we flattened the curve. And I think about 2 weeks later, this is
flattened the curve rally.
I did not buy hardly any stocks. On March 23rd, I was sitting with 70 or 80% cash in the long-term portfolio. And then the lockdown, I tweeted it that day. It was like April the 1st. I was like, flattening the curve rally. And that's when I started buying stocks. So I didn't buy at the bottom, but I started getting some of my stocks back. And obviously I had sold all of the stuff before the thing started. So I'm still, I'm selling a 325 SPY. And, and you're down here at 230 SPY. Well, you're still making money at 250 SPY, 260 SPY, 270 SPY. But by this time, I'd covered all of my puts, so I'm no longer hedged on the long-term portfolio. But I'm still sitting with all that stocks that I sold. I need to re-get those. And I remember I was scrambled for the next month trying to reload the portfolio, April, May, June. It was like the next couple of months I was scrambling to reload it. But every time I get a pullback, I was using that opportunity to try to get some of my long-term portfolio back.
So fast forward a couple weeks, and what happens? Market starts going up, right? We're getting that flattening
the curve rally.
And we were skeptical, but several guests came on our show, and they were bullish, and we were skeptical. But the first one was Craig Johnson. He came on the show on April 9th, and he was bullish. He was very bullish, and this is what he said on April 9th.
But right now, it looks like the bad news has been priced in. This has been a bear market, as my good friend Jim Paulson has said. This was like a hypersonic bear market that played out very, very quickly. And a lot of that got priced in extremely quickly. And right now, I look at all my breadth measures, all my gauges, all my sentiment things, and they got washed out to 0. And guys, I've only seen that happen now 5 times since the 1960s. This is the 5th. And when I get readings this low and I look out going forward, I find that the market on average is higher 13% 26 weeks later. So again, sentiment with the put-call ratio, I look at the AAII numbers, I will look at those short-term gauges and sentiment, and they really look like they were fairly well washed out. And now again, from the conversations I'm having with managers, they're starting to fear that they're missing out.
That was spot on.
That was right.
And I was sitting there and listening to it, and I was like, he's making good points. And I'm like, could we? I kept thinking at this point it was just a dead cat bounce, and we're eventually going to retest the lows. And that's why I wasn't going all in, but I was like, you know what? In case I'm wrong, every time we're gonna dip, I'm gonna buy a little bit of stocks, buying stocks that I thought would do okay. And I remember 2 of the first stocks, and this is when we started to see this lockdown versus reopening trade start to appear. But I was like, I'm like sitting there, I'm like, okay, what stocks do I want to own? What is actually going to do okay if we're in this, predicament here for the foreseeable future? And I remember Target had bad numbers, and it went from like 115 down to $100. And I loaded up Target, and UPS did the same thing. UPS had missed numbers, and I bought UPS, I think around the same thing, around $100. And those were 2 of the first stocks that I started to reload, and obviously those worked out.
I think Mitch wants to jump in real quick.
Yeah, I just wanted to ask a question. Like he just mentioned that it was kind of one of the fastest bear markets that we ever seen. Joel and Dennis, have you guys ever seen a market like that?
Not fall that fast. Like it fell. So this gives you perspective. You just started in April. Maybe you don't. In March, we fell over 30% in 3 weeks. The overall market fell 30% in 3 weeks. That's the fastest fall I've ever seen. And even in the financial crisis, Joel, I don't think we fell 30% in 3 weeks.
No.
We fell 60% overall, I believe. So it was ugly, significantly ugly. Think about that. Market falls 60%. Your 2-to-1 margin, your account is gone if you're long. So you got to think about that type of stuff. Thanks for the tip, Alan Moore. $100. Boom. We appreciate it.
And then we got 1,000 PHP, but I don't know what PHP.
We don't know what PHP is.
Yeah.
Thank you.
Thank you though for the PHPs.
We are only accepting Bitcoin donations.
You down with PHP? Yeah, you know me. So anyways, to answer your question, Mitch, the answer is no. I've been 21 years in the tech bubble. It got uglier too. I mean, NASDAQ went from 5,100 to 1,000. We went down 81% in the NASDAQ. So, but it didn't happen in 3 weeks. It happened over the course of, a year. Like we topped out and then we had these snapback rallies. We weren't even getting snapback rallies in this S&P sell-off. It was just down, 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 down. It's like they were giving you no outs. And don't kid yourself. Some people got really hurt in that market. Some people got really hurt in March. Not everybody was a hero. There was a lot of people who were long and they got buried trying to buy that first dip. So, I mean, can this stuff happen again? Absolutely, it can happen again. Do I see tea leaves for it happening again? No, not right now. And that's why I'm fairly confident to be, pretty long in my portfolio here. But, what I did right was get out of stocks in February. What I did wrong was I took too long to get back in.
All right, the chat says PHP is Filipino pesos. So
just one comment too on this is that the machines, got ahead of everybody on the way down, right? And the people that were selling and the machines beat them. The machines turned, okay? And the human element still trying to evaluate everything that's going on. The machines took it up so fast that a lot of people didn't, they were trying to, redeploy. You were thinking, okay, it's going to, a lot of people were looking, is it going to retest the low? It's going to wait for a retest.
I thought it was.
It just, boom, the machines were just coming in and they got way, way ahead of the market. And then, so the big boys that sold on the way down, they just didn't. And this is, my thesis, for years, we used to say that, the market goes down a lot faster than it goes up. I think with the machines now, I just, it's different now.
It happens even faster.
Yeah. It's almost equal.
You're 100% right, and it goes to market structure here, where you've got all algorithmic market makers now. All your market makers are algorithms, and they can just go shut down, boom, and there's no markets. I mean, the human being, and if you go back, even the way it was set up back in like 2000 or 2008, you did have affirmative obligations on the trading floor, and most of the trades, on the NYSE were traded on the NYSE. So you had a specialist on the floor to cushion the blow. And that, that designated market maker, they call them now, is not obligated like they used to be. And they shouldn't be. I mean, it's not the same markets it used to be. We rely very much on high frequency market making for our liquidity now. And that liquidity vanishes in times of stress, which we saw obviously back in March. And that's why these falls can happen so quickly.
All right, this is a very short clip from Ross Gerber on April 17th. He was also bullish, and he got the timeline right. I'll play this clip after I find it.
I can tell you the factors, but what I do think is the market will hit all-time highs again this year. I think that the liquidity is crazy. I think this thing is going to get solved. I think it'll be later in the year, and I think if Joe Biden takes the presidency in November and this thing gets cured, 2021 is amazing.
Yeah, there we go. That's where we are right now. Okay.
That was a great call. Everything about that was a great call.
Yeah, calling the election then.
Yeah.
Called the election, called the recovery. Good call.
If the story of the year was the coronavirus, story of the year in the markets was coronavirus, then the second story of the year was SPACs. So this is a clip from April 26th. Kenny Glick was on our show. He was the first person to mention SPACs on our show on April 26th. And Joel and I remember talking to Joel after, we were like skeeved out. by the move that this stock had. But I will play this clip now from Kenny Lake on April 26th.
I want stocks that make no sense. I want stocks that go up all the time, don't have any footing in reality at all, like Tesla and space and VTIQ, baby. Come on, they're revolutionizing the trucking world.
Wait, what's that one? I don't know that one. What's that one? Give us
VTIQ? Oh, get in right now. Hurry.
Hurry. VTIQ.
Yeah, Victor Tom Indigo Q. I don't know. My buddy tells me they're a disruptor in the something. So I bought it because it broke 15. I was like, I don't care what the story is. It looks, if it consolidated, it broke 15. I'm in. It's going to 20.
So VTIQ, of course, became Nikola.
Yeah.
And
they blasted off.
We were off to the races.
That was the start of the SPAC attack, and that was it went from $15 to $93. Obviously, it ended in tears, but I mean, that was the one that really kick-started the SPACs. I think, like, that was the one that everybody was talking about. Like, this, stock, went, and there was EV play, and like Kenny was saying, he didn't know anything about it, but it didn't matter. The people who were trading didn't know much about it, but it didn't matter. It was just flying, and obviously it ended up turning out not to be what everybody thought it was, or at least at this point in time, it's not what everybody thinks it is.
Yep.
But I mean, was the start of the SPAC attack, man. This was the start.
We're at everything.
Yeah, and I remember Joel and I were like, "What?" We were talking, like, "What is this Vector IQ? What is this?"
I didn't know what it was.
Yeah.
I never
know what it was.
SPACs. I just thought were $10 stocks that didn't move. I've seen these things for years, and I was like, "Oh, it's a SPAC. They don't do anything." Like, for years, this is what $10. They just sit at $10. They don't do anything, and half of them don't get an acquisition. They just sit there and do nothing. I was like, who trades SPACs?
Yeah.
For a decade, these things. It's not like this just came out. They were always there. They just didn't do anything. Yeah. So the year that the SPAC became interesting.
All right, this clip is from the next day. Dennis wanted to buy the dip on April 27th.
This is when I found. So this is just the market that it is. It's the ultimate buy the dip market right now. Every time we dip on anything, it feels like, except the stocks. So I'm going to put a little asterisk, except for the stocks that are at ground zero, like the airlines, the casinos. Now, although the casinos, they started to buy the dips on those too. So, but there's certain stocks that have been ignored. But for the most part, if you're a company that is somewhat sound and not directly impacted by this, buy the dip has been working better than it ever has before. Target last week, Intel. Just keep looking through the examples. And the overall S&P, I mean, overnight, same story. You get a dip. You think crude's getting killed. S&P's bound to probably go down, and it does go down for a little bit. But we'll find the silver lining somehow in this silver lining lit up market, and we'll buy it right back again. So this is the market that we're in. That's when I started buying the dip actively. And I remember what I said, how I'm going to reload my portfolio, because I was sitting with way too much cash. And I'm literally a month off the bottom, but we haven't rallied substantially yet. I mean, we're sitting, on April 17th, we're sitting around 260, 270 SPY. We're off the lows. But I'm like, I can remember it was like 240 SPY, 250 SPY, and the lockdown was working. It would flatten the curve, and the cases were going down. I'm like, I am like need to get stocks back. So every time we were in earnings season, and every time there would be an earnings dip, I would just buy it.
Yep.
I would just buy it, and I bought UPS, I bought Target, I bought and I still have some of these stocks, but I was just using that opportunity on individual stocks. And I remember even saying on the show, how I'm going to rebuild my portfolio is every time we get an earnings dip, I'm going to buy the stock. And that's how I ended up getting a lot of my portfolio back. And obviously my long-term portfolio, trading portfolio is completely different. I'm long, short, we know I'm neutral, but I'm talking the long-term investment portfolio where I had went from fully invested, in January to 70 or 80% cash, in February, March, and to actually having puts, so probably making money as the market goes down, to the implosion, and then being late to come to reality that the bottom had been put in. I was at least a month late.
Yeah, and I think one that I can remember, at least my psychology was, okay, well, this quarter is not really going to reflect the crux of the pandemic, right? Because it was still pretty early in reporting. And so I was thinking, okay, the hammer is going to come down in the next quarter, where I was wrong on that. I mean, the stocks got hit in that quarter, they were bought, and then I remember talking on the show, it's like, well, they're giving the stock a pass. They would have like horrible, lost all the money, and it was horrible, and the stock would open up down. and then rally back. And there were people that were obviously, you, Dennis, were looking at it and looking forward. But I think one mistake I made there was like, okay, well, this is not going to be the bad quarter. The next quarter is going to be the next one. And it turned out not to be.
All right. If there was one clip, one moment this year that epitomizes the craziness, it happened on May 22nd with our boss, Jason Raznick. I would just note, watch what Joel does at the beginning of this clip. This is very funny. This happened at the end of the show. It was like 9 o'clock. It was like 8:58 when this went down. Basically, what happened is Jason predicted a headline moments before it happened.
Crazy.
Watch what Joel does. It's pretty funny.
He bails. Okay, XSPA just blasted off here, Jason, right now.
Oh my God.
Moving?
Oh my God.
All right. So, anyways,
you know what? I'm
like we
signing
said,
out, guys.
this
I'll
is
let you
just-
guys finish. I'll let you guys finish.
A lot of people apparently like what Jason has to say.
All right, that's a nice move there. All right, I'll check.
Okay, you can't ever get trades like that. But I'm going to tell you something. That this is going to blow your mind too. But 9 o'clock contract J. So there's an actual headline that just broke saying exactly what Jason just said. So
really,
yeah, I'm kind of in shock here right now. So Express Boss.
Oh my God! Oh my God, Jason!
With JFK International Airport for COVID screenings. So.
How did you do that?
I didn't. I would have bought more shares yesterday, Spencer, if I really knew that.
Wow, yeah, that just hit the tape. They signed a contract for COVID-19.
This is like the biggest coincidental thing I've ever seen in my life. that was unbelievable. It was the biggest coincidental thing I've ever seen in my life. Joel's like, did he know something? I'm getting the hell out of here. And obviously,
no. The doorbell rang.
Strikes.
The UPS guy was here.
UPS guy Joel was like, I'm out of here. It was crazy though. He predicted on the show like 5 minutes earlier, 3 minutes earlier, that XSPA was going to get in COVID testing because he had done the research looking, and this was just great research, that they had hired some doctor. And why would they do that? 3 weeks ago. And then the headline broke at 9 a.m. It literally came from PR, which is a different source than Benzinga. So it's not like Benzinga broke this headline.
It was like a press release. It went out to the
There was a press release from the company, XSPA, saying we're getting a COVID screening. And the stock blasted off 100% in the next like 20 minutes. I was like, me and Spencer's jaws like, what just happened here? Did you have like a vision? Like, how did you know that was going to happen? And he didn't know anything. It was just a huge coincidence, but unbelievable research by Jason Raznick to predict that they were going to get into COVID. He thought they were going to get into COVID testing. And they got into COVID screening.
Right.
It was
at the airport. Yeah.
Right.
Anyway, it was slightly different. But in either way, great call by Jason. That was like the best live call on this show ever because the story materialized 3 minutes later.
Yep.
So it was unbelievable.
So fast forward to June 8th, and market's going up, and everything is really rallying. The airlines are rallying, the cruise stocks, everything is rallying, and we're thinking, was that it? Was that really it? And then Dennis came in with this doozy right here. I
still think I said this on the Friday afternoon show, which I've never been on before, but I think I said if we come in and we get a bounce on Monday morning, I think the airlines are to be sold and the banks to be sold in that bounce. So I'm going to stick with that. We're getting a nice bounce on all those things. I think the highs are still in. Again, it's hard to call the top, so they take it up. But if I was going short, I would lean on Friday's highs in a lot of these things. This was June 8th when UAL went from like $30 to $48 in 3 days. So I went short, and that was, the top. And then they obviously imploded again after that. We know like all the airlines came back off, and, the reopening play died right then. Like, for the next 4 months, the reopening stocks were in the gutter. But everybody just thought, okay, we're all going right back on every stock, and that didn't materialize. So I got the timing right on that one.
You gave a reference point too. I think I remember this American Airlines. That thing was just like, and it was just trading super the volume in the pre-market, and it was like, is this? And they were just gobbling up everything. And I think I can't go back and look at the chart to see where the pre-market high was and where it actually ended up. But it was just, and you were saying, I remember that one, because you were like, if you're buying the airlines now, you're buying it too late. And
AAL went from $10 to $22 in a week.
Yep.
We are way in better shape now, and AAL is 16. So it still has not got back to that June 5th high when or June 6th or whatever the day was when it hit 22. It got stupid. People were just like, oh yeah, we're going right back up. I'm like, are we really right out of this now? We started at 27 on AL. We came back to 22. That's the irrational exuberance in the short term. That's people FOMO chasing, and FOMO is still down in that purchase. So when you buy these 100%, 200%, 300% rallies, and this goes to Fubo too. I mean, I bought Fubo at 13. I held a piece. I shouldn't have held a piece, but the chat can't stop talking about it. I mean, it went from 30 to 60 in 4 days. That was the irrational. So what has happened now? It's come back to reality. It got back to reality because we've got, an analyst that won't stop talking bearish about it. But I mean, now you're starting to get to a point where I don't know. I still have a piece of Fubo. I obviously should have sold it all. Obviously wrong. But if you're buying it at 50 or 60 after it just ran from 30, that's chasing. You gotta, cut those losses as you can. I'm still in from 13, and I sold a bunch of it. So I mean, I'm holding a piece, but anyways, it's just showing you like these crazy moves happen. And if you're buying a stock after it moves, American Airlines moved 100% in a week. If you're buying a stock after it moves 100% in a week, that's the recipe to lose money.
Yep. Okay. So we're actually almost done here. This next one is from July 30th. Good lesson in market structure as it relates to a news headline. That stock being talked about here is Kodak.
Because there's people out here, and here comes a rant. There's people that believe that shorting is just flat out un-American. You don't short stocks. It is evil to short stocks. Kodak goes up to $60 because nobody can short it. That's why it happens. So the person who buys it at 60 is a victim because nobody can short the bloody thing. So because if people could short it, they would keep price lower.
Yeah.
And we're scared when the things are going like that too. I mean, look at the Kodak chart. I don't know if you can bring it up here right now, but it went on that headline from $2 to $60, getting back a decade of losses, in a company that's better days are well behind it. And people actually buying it up there. Somebody top ticked that, bought that at 60 and 50 and 40 and 30 and 20 and 10, and the stock's $8 now. And if you think it's going back to 60, I don't know if that next government headline's coming to bail you out on this one. I honestly think Kodak is probably eventually going back to 2. So, I mean, the person who bought it at 8 buys it at 8 today, maybe gets to 10, maybe gets some dog relief in January effects type style. But these things usually, when they're just driven by FOMO and, not reality, eventually end in tears. Kodak quickly ended in tears.
Mm-hmm. Yep. And speaking of shorting, we had Andrew Left on the show. This is on September 29th. We asked him what his biggest mistake was when he shorted Peloton. And here is what Andrew Left had to say.
And I realized something. My biggest mistake as a short seller is shorting a good product on valuation. I think the valuation on Peloton is stupid, ridiculous, nonsensical. I think the valuation on Shopify is stupid, ridiculous, nonsensical. They're both very good products. How about Tesla? Stupid, ridiculous, nonsensical. Why short a good? Historically, if you want to make money in this market, the past 10 years, if you find a product and you like the product, you buy the stock. You do not worry about the price of the stock.
That's so right. I mean, valuation doesn't matter as long as the product remains hot. It's when the product starts to cool down that valuation starts to matter. And valuation eventually matters for all stocks. It doesn't matter when you're in that early adoption period where people are getting into something. They're ordering Pelotons. They're still, we're in the early adoption period for EV. So people are still, buying Teslas, and the story is still hot. People are talking about Tesla, and you don't see a Tesla. You don't see 1,000 of them on the road here. You don't see them everywhere, but eventually you're going to start to see more and more of these. And once everybody's in it, that's when the stocks top out. So what I've learned, and I've learned this the hard way, but, especially in 2020, is that one, I don't short stocks making new all-time highs, but two, is don't short a hot story beyond valuation, because valuation doesn't matter when the story is hot. It matters when the story goes cool or cold. That's when the valuation starts to matter. So don't be a hero trying to short the top. It goes for Tesla right now. The story has not cooled off. That's why we said back when it was 650 here, I took a lot of heat 3-4 days ago when I said I think Tesla could eventually hit that 695 again, because it was just the technicals.
It wouldn't go down.
It wouldn't go down. It should have collapsed after, I said 695 that was going to top ticket And I thought that was going to be it, but it would not go down. It should have kept going down, and it wouldn't. And buyers started emerging, and here they are again. And you know what? Tesla's making new all-time highs here today. I do not short stocks making new all-time highs. Does the valuation make any sense? It makes no sense, but it doesn't matter. Andrew left spot on. Hot product, hot topic, hot stock. Traders don't in the short term trade on fundamentals.
I just want to just a couple comments on that. The small piece of Tesla that we had was pre. I mean, this obviously we were at a mall and they had a little pop-up store, and I don't know, Somerset, I don't know where we were at, and I walked in there with Lisa, and she's like, "Hey, that's a pretty cool looking car." You know, and then that's when we ended up and then the other thing with
you make money doing that.
And the other thing with the Peloton, we actually in December, Lisa was like, you know, I can't get up at 5 o'clock and go to the gym and go swimming. I want, you know, we got to get rid of this old bike and also this treadmill, 25 years old. She goes, so we went out to the mall and, you know, we got Pelotons. This is like second week in December or something. And then can't remember, shortly after that, she goes, you know what? This was pre-pandemic. She's like, I think this is going to catch on to people. I really like it. And then that, so just alluding to what Mr. Left said, you know, my problem is like when I go down the street and I see something that I don't like, I like to do a revenge trade.
Yeah, short it.
But I'll tell you right now,
to go short the stock.
I'll tell you right now. I mean, these fast food stocks. I mean, you still go by these. I don't know what people are just eating so much fast food. It's Starbucks, and Popeyes. I mean, the lines are still going out to the road. I guess people are just sick of cooking, and so. But I'm like, who would wait that long in a line to get a Big Mac? You know, I mean, it's incredible. But
okay, we got 2 clips left.
All right, let's go.
Go. I'd be remiss not to mention Bitcoin. We had Mark Yusko on the show on November 11th, and he gave us, and he's been on our show before, and he's been bullish Bitcoin for years. We've talked.
Oh, this was the call.
But he gave us a very good way of thinking about Bitcoin. This is from November 11th.
I still think 3 to 5% is the right number. And the reason I think about that number is I view it as a diversifying asset like gold, right? I think you should have 3 to 5% in something like gold, physical asset. I think you should have 3 to 5% in Bitcoin as a digital asset. The best thing about Bitcoin is it is the only asset, including gold, bonds, everything, that is truly uncorrelated to traditional assets. It's 0.15 correlated to the S&P. So when you add it to your portfolio, you get lower risk in the overall portfolio and better return.
I turned around after that interview and I was like, I need to buy Bitcoin. And it ran for like a week and a half. I was like, I missed it again. It went from like 15,000, like 21,000. I'm like, holy, I missed this. And then Thanksgiving happened, gave me the shot, and I bought Bitcoin around, it ended up being around, averaged in around 17,000. And obviously we're 29 here this morning, so it's been a good purchase. So, I mean, thank you, Mark Yusko, for, at least, talking. One thing I'm thinking about here, though, is, and I'm going to say it again. If you're buying Bitcoin today, you just bought it after it ran 12,000 points. It's up 70% a month. Because I know, because I bought it a month ago, and I bought QBTC in Canada, and its premium has expanded too. I bought this at $25.50 or something in Canada. It hit 51 yesterday. I've doubled my money in 1 month. I almost feel like selling half just because now I can completely play with the house's money forever. When you double your money in 1 month in something, I said I would hold on this Bitcoin forever, but maybe I should sell half. And chat, tell me what I should do. I literally, the premiums expanded too, because it was trading at like NAV, and because everybody's hot for it, you can put in your RSP in Canada. This thing's trading like 15% above NAV. So it's trading. So I picked up not only the move in Bitcoin, I picked up extra move. I think it might even be 20% above NAV because everybody wants in the bloody product that, I picked up. So part of me thinks I should sell half, then play with the house's money and not look at it ever again. What are your thoughts?
Well, you said, first of all, I remember I turned the screen on to see where the SPOOs were, and I saw the Bitcoin down, and I was just getting ready to text you, and you texted me back, and you said, "I'm buying this." Yeah. why don't you just try, instead of like trying to say, hey, 29, wait for it. It's technical. Wait for like a double top, a consolidation, and then for
you know why?
guy.
I got it in my head that everything that was really hot is going to have a rough early January. I have this in my head right now, and maybe we should, you got one more clip. Play the last clip, then we give our market thoughts.
All right, this is our last clip. This is a little bit longer. It's from Josh Brown. He came on our show on November 20th. This is a 2-minute clip. He explained the downside of direct listings and stocks not going public via the traditional IPO process in the context of Slack. Now, this was before Slack got bought by Salesforce, like a couple weeks before, I think. But here's Josh Brown on the downside of direct listings.
So there's another thing, though, that I didn't count on that I guess I got wrong. And this applies to all direct listing stocks. The trade-off for a regular way IPO versus a direct listing. So Snowflake is a regular way IPO. Slack, Spotify, there are a handful of others, high-profile companies were direct listings. In an IPO, the insiders have to hold on to their stock. They have a lockup period, and the lockup period expires. Sometimes they stagger it. There are 2 separate expirations, but employees and executives, they can't just get liquid on day one. They have to hold, and that sometimes can help keep the float small and provide support for the share price in the early going. Company usually has 2 quarters, 3 quarters to report results before there are any large blocks for sale from the insiders. Okay. In a direct listing, they basically say, okay, here's the trade-off. We're just going to list this right here at this price, and everyone's liquid day one. So there was no underwriter, right? So the Wall Street banks didn't do any work for them. So they say, well, we could sell whenever we want. We're not obligated. We don't have to make any promises to anyone because they're not going public to raise money. They've already raised the money. They're specifically going public to provide liquidity for people who have already invested, the venture capitalists. So with Slack, 2 problems with going public that way. The first is they don't have any champions. If Morgan Stanley and JP Morgan and Goldman Sachs and Bank of America didn't serve as your underwriter and sell this to all their clients, they're not incentivized to come out 30 days after the IPO and give you a strong buy. So Slack never really got that institutional support from the street because they didn't pay anybody enough money. That's the problem. The second problem, though, is people were liquid to sell immediately. So I think that definitely had an impact on the lack of momentum. So I didn't count on those things. It escaped me how important that they might have been.
Yeah.
That's a great point. I mean, when you're thinking about stuff like that, and obviously, we talked about, even Facebook IPO, I remember back in the day, Joel, and you could see at 38, they were just holding that price the whole first day. They would not let it go by there because you don't want it to trade below that price where everybody's like, oh,
It's crazy.
So,
yep.
Yeah, so they do give that institutional support there to that price, and you don't have that. So that's it's a great point, Josh.
All right, 9:02, guys. Let's wrap this thing up.
Great job, Spencer.
Yeah, that was fun. That was fun.
Yeah.
We got to stick for a couple minutes just to talk a couple extra stocks too. I know the chat's going hot on FUBO. I'm going to give you my thoughts. I quickly talked about it just in the middle of the show here, but yes, I'm still long a small piece. Yes, it was definitely a mistake. I should have just sold it all. Joel warned us around $52 when it was breaking down from that, but I thought the story still had more gas in the tank. I did not anticipate an analyst coming out and being as possibly bearish, and then you had who was yesterday? They're ganging up on it now.
Yeah.
Everybody is ganging up on this. I mean, valuation is the market. Valuation don't matter. And you know what? But it does matter when you've got an analyst that is tweeting about it 1,000 times a day. We're talking Rich Greenfield from Lightshed, who was on CNBC yesterday. I mean, he is just talk, and every time he comes on, the stock falls 5%. So, I mean, it's just people who are caught in this thing that have bought it at 50, 40. And I thought it was going to stop at 35, 40. I even said, it was 41. I was like, mid-30s, this should find some support. It hasn't, because that analyst continues to just bang the bearish, just talking bearish nonstop about it. Every time it gets a positive headline, he comes out and talks bearish. It needs somebody to defend it to stop going down. I'm not going to be the person to defend it. It got overdone. Do I think the story is over? No. Do I think the story has cooled off substantially? Absolutely. Is it going to find support at 30 from where it broke out? Technically, you'd think so, but it's so bloody, weak that it's hard. So I have a small piece still. I wish I would have sold it all.
It was a larger piece.
Well, yeah. Well, no, it was no, but I sold 80% of my position. I said that it got overdone. You had to lighten up. It was stupid. I kept a small piece. I said it forever. I'm playing with the house's money. I sold way more than I kept in the stock. So I'm forever playing with the house's money on FUBO. But I thought I was going to buy more. And I tried to buy more at 40, and it stopped me out because I was like, it's just too weak. I tweeted it that day. I bought more at the open at 40, and then I was like, no, it's too weak. I could see it rolling over again. So I turned around. I took only a 15-cent loss. I talked about on that show that day. I was up $1 in it. I picked the bottom on that day, like the 39.15, and it ran up to like 41. But then it started to roll over, and I was like, no, it's too heavy. I can feel the heaviness of it. And I mean, it's still really heavy right now. Has everybody washed out of this thing? I mean, valuation is probably, it's not probably even worth $31. I mean, you can't look at valuation on stuff. But if they're going to keep pounding the table on it, that this is the best short, he said, Greenfield said it on CNBC yesterday, that this was the most compelling short that I've seen in my 25 years. He's talking that bearish about it. And then you have the Kensingdale coming on and talking bearish about it.
Yep.
Carisdale, whatever the hell their names are, talking. They gang up on it. Everybody's ganging up on it. I do think you're going to have a relief rally in it at some point in time, but it's hard to get the story hot again when you've got, major outspoken critics bringing the bear, saying that this is just not worth what it is.
First of all, we do not give investment advice, but this is what two things in Fubo, and I'm gonna, just because this is such a wild thing, I'm looking on the upper right chart here. Boy, you spent a lot of time between 25 and 30, right?
I think it's got to find some support. Nothing not do anything, but don't you think it's going to find some support in that?
I would like to see it come down in this 25 to 30 range and see what it can do. I really think you're going to find some support. I mean, already, I don't know where to do a retracement now. I think I already did. It's already through the 50% off to 15. But two things I would look for this for. One, let's see what happens between 25 and 30. I'm giving you a wide range because this is a wild stock. And then also, and I don't think you hear me say this too much, occasionally, but there are some analysts on the street that really know what the hell they're doing. And what is Laura Martin? And she went bullish on the same day, November 9th, as a guy from BMO. And that stock barely moved that day. It was like around $11. And I remember it only went up 39 cents. So I'll see what happens between 20. Let's see if it gets down to 25 or 30. And then, see what she comes out. Because I tell you right now, if you're short this thing and she comes down and she upgrades it, you're going to get a whooping because it's going to do it. So there's just a couple things. And I'm just I know that's a wide range, and I know how you try and go to the penny on stuff, but when the stock's gone from 15 to 62.50 back to 30.
Oh, it's wild.
Yeah, you got to give yourself some room on that
Big
one.
time.
Full disclosure, no position. I looked at this thing when they took out that 52.50, that double bottom, but
you had a great call there.
Yeah.
And I should have sold it that day. Mitch, you're in the background. What are your thoughts here? Because you've been out in Fubo for a while, but you were the original one who gave us Fubo. Are you looking to get back in this thing?
So one of the things that I always like is how Joel mentioned. I started seeing that level too, the same kind of level he sees, but I'm looking more on that monthly, and I can see it pulling back closer towards that 20 and that 25 area. So like I mentioned in the chat, I'll be looking for consolidation in this stock. So that's what I'm really looking for. I'm looking for like a good sideways 2 weeks, 3 weeks to show that there's no like kind of trend, like the bears don't have control, the bulls don't have control. And I think that's what I'm going to be looking for in Fubo. But really, I mean, I said, to kind of ring the register at 26. I felt that was a kind of a level. That was when Dennis first took his first profit, and and that's kind of the level that I felt that evaluations made sense. Then they did that purchase of the Balto Sports, and the investors just reacted massively. And I think everyone kind of saw that move up to $60 as an overextension, way too quick.
Yeah.
Also, I would like for the volume to slow down on the date. Its highest volume day was the day it made that all-time high, 35 million, almost 36 million. Yesterday, it traded 53.5 million. So, a lot of these times, everyone that's out of the, wants to get out of the pool is out of the pool, And so at least let it come down. Because You got to get the big sellers out of there.
Well,
people are still sitting on a profit, right? At
I'm still up, like I bought at 13. I'm still up like 200% on the last, the last little piece that I held. I wish I would have sold it all because I watched a lot. That extra, gain go away. But anyways, I guess you just should sell it all. But anyway, I'm wrong, obviously wrong. But I mean, why come in here now and be a hero at 31? Wait till it stops going down. Mitch is saying, you get in that 25, let it consolidate for a couple of days, stop going down. You need an analyst to come out and defend it, or, because they keep ganging up, and the Greenfield doesn't look like he's going to stop. I mean, I think he's tweeted like 5 times already this morning. Every single tweet. It's unbelievable. I've never seen analysts do that before. That vocal. Like, let's go Rich Lights Shed. And just look at his tweets from this morning. He not stop.
We can try. He's been tough to get a hold of.
Okay, so this morning, 52 minutes ago, why we believe Fubo is headed to $8. 57 minutes ago, more early owners blowing out of Fubo. 4 million share block being sold via JP Morgan. You've got, and then last night, it's literally every tweet. That's all he talks about is Fubo. He's on there, Fubo.
Maybe
sell $8.
Maybe he had a bad experience with the product. I don't know.
I mean, he's got the hate on for this stock, and maybe, and he's been right. But I mean, a lot of this is due to him as well. Don't kid yourself. A lot of this fall is because he's been so bearish. So I mean, he's not going to stop. So you can see he's not going to stop. He wants the thing down to $8 so he can say, I called this whole thing, and he's going to make a huge name for himself. And props for him for having the guts to, call it, when it started. He waited till it started going down the first day. But I mean, props to him for, making a bold call that this bubble was going to burst. And he kind of made the bubble burst. Yeah. So, I mean, but he is not stopping anytime soon, it doesn't look like. So until you get another analyst that can come out and say, okay, look, there is a bullish thesis, it's hard to be a buyer of something going straight down. It's going to bounce. It's due to bounce. It's had some bounces. It's bounced from 36 to 41. Had a few bounces in there, but I'm not coming in with new money here until I see this stock start to stabilize.
At least stop.
I tried it at 40 and I got stopped out. So on the extra, what the little piece that I've got that I bought at 13, should I ring the register and sell the rest of it? Probably, but I don't think it's going back to 13. So obviously, I thought it was going back to 31. I would have sold it at 40 or sold it at 50. I didn't think it was coming down to 31. I thought it was going to stall out and find some support around 40. Wrong. It's coming all the way back in. So I don't know where the bottom is. Am I going to sell that last little piece? I don't think I'm going to sell that last little piece. But, emotions get the best of you sometimes too. I'm still up substantially in that little piece, but I'm trying not to think about it, to be honest. It's ugly. It was a bad call by me.
That small position. Anything, Mitch, were you going to hop in there?
Yeah. So a question I ask myself, Dennis, and I've been using this question often now, is ask myself, if the perfect environment, if it's just the perfect environment for my stock and it keeps going in my direction, how much more can I get from this stock? And I think that's a great question to ask yourself, because a lot of the times you're going to see that maybe it's like 5-10% more. And is that really worth it when you have like, 100% gainer or an 80% gainer? That's a question you have to ask for yourself, and it has to be all about your risk tolerance. But, to me, I think, those are the kind of gains that you just got to run away with the profits and celebrate the wins.
I mean, you do. And you know what? It is a big winner for me this year. The Fubo was a great trade. Like I said, I started selling it when it doubled, and then I sold more when it got just stupid. And I was like, I'm going to hold a piece because I'm forever trading with the house's money. And, that was a wrong call. I should have sold it all. But, that being said as well, I didn't know that the story was going to go ice cold 2 days later. I didn't know it was going to be an analyst that's going to come out and say, sell this thing at 10,000 times on Twitter with an $8 price target on it. I didn't know that was going to happen. So, I mean, it is what it is. I got
one last thing here. One last thing, and I think it's an important one, is that a lot of how I got these kind of picks and stocks that I got into was watching the show, guys. And I have to personally really thank you, Joel and Dennis, because you guys have taught me so much. Not only in kind of, let's say, looking at technicals, looking at fundamentals, but taking a different kind of approach and really looking at stocks kind of more in this story approach, and trying to time with kind of the catalyst and using a combination and not just technicals. You know, I used to be a very technical trader, day trader, just strictly technicals. I didn't even care about the story. I just cared that the stock was going up and had volume. And I learned a lot this year. So I definitely want to personally say thank you for you guys, and I'll be looking forward to learning more.
We've been learning from you too, Mitch. I watched that SPAC attack show that you do with Chris Catchy over there, and I mean, you guys do a fabulous job on that. So, Chris, the information station over there, you do a great job hosting it. You've grown. You know, I keep growing. We all continue to grow as traders and investors. We're never going to be 100%. You know, we all live in probabilities. We all live in edges. We're all going to be right and wrong a lot of times. It's being able to accept those trades and admit when you're wrong and get the hell out when you're wrong, as opposed to letting something go against you. And in this case with the Fubo, I've let it, maybe because I was playing with the house's money, that I've let it go a lot further than I should have. But I mean, we all learn. Mitch, thanks for everything that you've brought to us this year too. Spencer as well. We're all constantly learning in the chat. We've learned so much from so many people in the chat. We've got some great stocks. That's where we got Mitch from, was the chat originally. And we've got so many other people, Spinner in our chat, that we learned so much from. I wish I could name everybody. There's a bazillion, people in our chat who are great traders. And, that's why I say I do this show. I don't do this show for the money. I make a lot more trading than I do from this show and Benzinga. But I do this show because I learn from you guys, and it makes me more focused in my trader. I become a better trader because I participate in the show with great other traders that are in the chat, giving us different ideas, giving us different setups, and looking and expanding our trading. Because I've always been a value guy, and look, I'm playing some of this Momo stuff and doing some different things that's out of my wheelhouse too. So we're all learning, and so I thank everyone from the chat. Thank you, Mitch, Spencer, Joel. Thanks, everyone.
And I just want to add two things. First of all, just Spencer. He's the glue that holds his show together. He puts up with a lot of my, you guys don't know how temperamental I am and stuff.
I'm temperamental too.
Yeah, he puts up with us, and so just an improvement that we've seen in him over the last couple of years. And second of all, Mitch and Dennis and me and Spencer and Jason, but I think what we bring to you guys is some really great opinions from Wall Street. Not just our opinions. And if you looked at some of those clips, they're not all me, they're not all Dennis, there's some pretty well-respected people on Wall Street. So I want to thank all of our guests. I mean, Gene Munster, Craig Johnson, Andrew Left. I mean, and when these guys come on the show, they don't have a cue card saying, okay, yeah, 1-2 minutes, you're out, next segment. We let people. So send us your guest suggestions and send us people, because that's where I've learned a lot. Like the Live Event Corp, from Gene Munster and stuff. So there's a lot of different aspects to this show that we try and bring you to, and we just want to improve in 2021.
Okay, and on that note, I just saw a couple questions in the chat. Full day today. Markets closed at 4 o'clock Eastern time. So Joel, we're still doing a closing show, I would imagine, at 3:40. Yeah. So we've got that, but full day on the market today. So don't worry about any weird hours. And I want to echo what everyone else has already said. Obviously, the show would be nothing without Joel and Dennis. We wouldn't have a show without Joel and Dennis, and Joel and Dennis will be talking to themselves without all you.
We used to do that
in the chat and listeners. So
Uvu.
It's been a strange year, a terrible year in some respects, a great year in others. So we couldn't have done it without you guys. We always appreciate all your support. You can email us your guest suggestions. Email us any suggestions. premarket@benzinga.com. That goes to all four of us.
Yep.
And
Dennis doesn't look at it, but
and I do look at it. Hit that like button as well. Hit that like button. Show us some love on New Year's Eve. And that's what I wanted to say. So I think this is our last show of the year. But like I said, we'll be back at 3:40 p.m. Eastern time to really wrap up the year. But from all of us here at Benzinga to all of you, thank you for everything, for the comments, for the love, for the hate, for the super chats, for the donations in dollars and Filipino pesos and Nigerian whatever. We appreciate all of it.
Bitcoin.
Bitcoin. All right, everyone, have a great rest of your day. We'll talk to you before the close, and good luck in your trading.